Hello everyone and welcome back to another episode. My name is Jordan, I'm a millennial investor. In today's episode, we are going over Roku stock. This stock has seen an absolute huge downturn in the last several months, and honestly even going back to the past year or so. You can see down 54.8% in the last year, and it has just been absolutely devastated. So I'm going to go over in this video why in the short term, over the last several months to a year, it's really been hit down and down and down, but why I think it's finally possibly a good time to finally add some shares to this company. I don't own any shares right now, but I'm potentially looking at making a pretty substantial investment relative to my portfolio size of about $30,000 into Roku stock. If you haven't got signed up with them on Finance already, there is a $50 referral down below. You just click this link, deposit $100, and you get a free $50. So that's a guaranteed 50% return. So if you just want to sign up, you can be the 125th person to do so. Every single one of them has loved it. It's free to use. There's no fees whatsoever, and I fully stand behind them, and I've used them for years. And that's also what we're going to be using in today's video. Now, if you're not familiar with me, my name is Jordan. I'm a millennial investor, and these are my goals and how I plan to get to $1 million by my 40th birthday, which is February 5th, 2039. And these are my month-over-month and year-over-year goals and how I plan to get there. And as usual, I show all my investments in every single video, and this is one that I'm wanting to make, and so this is why I wanted to start with Roku. So Roku stock is what we're going to be going over today, and without further ado, let's go ahead and jump straight into it. So first off, for starters, let's look at the 2-year chart and see where it peaked out at. And we'll actually pull up a candlestick through Webull so we can get the exact number. The absolute peak on, July 7th, 2021 was $490.76. So an extremely higher number than what we're facing today. This is down well over 50% from its all-time highs, with today currently sitting at $180.41. And just the most recent trading day, as the time I'm filming this on January 7th, it hit yet another low, going down another $13, or the equivalent of 6.92%. And so this stock has been hit very hard, but that leads me to the question, what is this company's business doing? You would probably think, if you only looked at these stock charts, if you looked at this last year, if you looked at the last 6 months, you looked at the last year, you looked at the last year and a half, you would think that this company is just starting to do horrible. But if you look at the company's fundamental business, you would probably be quite surprised. Let's go ahead and start off here with the hypercharts. This is the website that I love, hypercharts.co/Roku. And let's go ahead and look at the active accounts. And this is not annual, this is quarterly. So we'll look at both annual and quarterly numbers. But these are the amount of accounts that are signed up with Roku. 19.3, 20.8, 22 million, 23 million, 27 million, 29, 30, 32, 36, 39, 43, 46, 51, 53, 55, and in the most recent quarter, as of quarter 3 2021, they had 56.4 million. Now, just look at that quarter over quarter active account growth. Roku Strategy, they sell TVs, but they also do advertisements. This company's business is not focused so much on selling the TVs itself. They try to sell them for a really low price and just get in many households as they can so they can show as many advertisements as possible as their advertisements pay them, especially big in the fourth quarter. So expect a big ramp up here in the next 30 days when they report these numbers. Now, streaming hours, same thing. They also have their own streaming service. So this has been uptrending from 4 billion, 5 billion, 6 billion, all the way up to the massive uproar we had today thanks to the pandemic and the continued growth of this company, with as of the most recent quarter, in quarter 3 of 2021, reporting 18 billion streaming hours. So very impressive there. And if you want to take a look at this, we won't go over this one, but platform versus player, that's the revenue growth breakdown right there. And here's the total revenue if you add them both together. Quarter over quarter, this is what the actual revenue breakdown looks like. Like I said, if you look at fourth quarters right here, right here, right here, right here, and then the one that's coming up right now, you can see how there's a big jump up in the fourth quarter pretty much every year. Like I said, they get primarily a lot of their revenue from advertising, right? And so in the fourth quarter, advertisers spend buku amounts of money coming into the fourth quarter to get ready for the holiday shopping season, Christmas, New Year's, Thanksgiving, all that good stuff. So that is why it looks so jagged. But generally, you can see the trend line is going up and up and up, both before, during, and after the pandemic. Now, looking at this on an annual basis, this shows both 2016, 2017, 2018, 2019, 2020, projected to finish out with 2021 and looking into future years. You can see on an annualized basis, this is really starting to increase quite nicely. Now, looking at the revenue and profitability estimates, okay? So first off, we're going to finish out with 2.8 billion projected in 2021 right here. Now that represents year-over-year growth of 57% growth. The following year, 3.8 billion, a $1 billion increase estimated, then that would give the company a representation of about 36% revenue growth. The following year, 4.98 billion, about a $1.2 billion increase, which would represent yet again a 30+% revenue growth increase. Now the profitability, I should probably mention this real quick going back to the hypercharts. This is a company that's finally turning profitable. They've been focusing on growth, top line numbers, and finally now they're starting to turn a profit, which is what I like to see. I like companies that are profitable. In the last year or so, they've done 12 million in net income in quarter 3 of 2020. Then they went up to 67 million, 76 million, 70 million, 60 million. They're currently producing today about $60 or $70 million in net income a quarter, and that is projected to go up substantially over the next year or so. Now, looking in 2022, they are going to go flat in terms of their profitability. They're down to go 1 penny, so it's going to be about flat from where they're at now. And then 2023 is going to be the big ramp up in terms of their margins and their expansion on their multiples in terms of their profitability metrics. Now, it's expected to over double to go from 1.54 to 3.21 in earnings per share, and that is going to represent hundreds of millions of dollars of bottom line profit. If that's correct, just look at the shares available here right now outstanding. There's 134 million outstanding. So just some rough math in my head real quick. If I take, what is that? 134 times 3.2. So what is that? That's about $500 million. So I'm doing that in my head right. About $500 million in pure net income that this company is projected to do in 2023, coming up just 12 months from now. Now, looking at the balance sheet, this is a company that also has a really healthy balance sheet. The cash and cash equivalents as of the most recent update was 2.1 billion. But if we scroll down to the long-term debt, this company does not have a lot of long-term debt weighing it down, as right now it's currently only sitting at 82 million. So this company has virtually no long-term debt. It is absolutely incredible looking at this company set up for its financial future, and its current liabilities are not out of control as well at 668 million. So they have billions of dollars of net cash on the balance sheet, and that's pretty substantial for a company that only has a $24 billion market cap. So this is the type of prices right now where I look at it for Roku, and I see this being under $200. For me, when it's under 200, that's when it's really interesting. 200 to 250, it's like, oh, it's kind of interesting, it still has a long-term growth story, but as a long-term hold, anything under 200 right now is what I consider to really be interesting. Right now, I'm trying to free up some capital, so maybe I'll start a big position in this. Those of you that follow me know that typically when I buy in the multiples of hundreds of shares. And since I have a $30,000 portfolio, committing $18,000 for 100 shares of this company would be a lot. But in the meantime, I'm just holding on, hoping it goes lower. If we could see this company go down to 170, 160, 150, that would even get more and more attractive for me as a long-term investor. But anyways, guys, like I said, M1 Finance is a company that I love, a brokers that I've used, and 124 people have signed up using my link so far. So B1 number 125. That's one of the ones that we used in today's platform, and this is showcasing the brokerage, but please sign up for it. It would help support me and my channel. But other than that, stay tuned for future videos and how I plan to get to $1 million by the age of 40. But other than that, guys, thank you so much for watching, and I'll catch you guys next time.